Hey, this is Jack from Alpha Charts with a state of the market video. Today is November 18th, 2023. And before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right. Thank you all for watching the video. If you haven't done so, like and subscribe. Also, you can find me on Twitter or X at AlphaCharts365. I'm always posting a bunch of stuff there, so consider that as well. Okay, let's get into these charts. We'll start off with the SPY like we always do, and just zooming out from January of 2022. There's about a 2-year base in the making, and it looks like it's going to come up to the decision point if it wants to complete it or not. Right? Everything looks good, like it should. Very nice, symmetrical-ish, cup and handle-ish, type of base. Nothing to really, be bearish about up here, right? Zooming into this part about it, as we come into this 457, 460, 455, somewhere around there, this purplish area, maybe we'll find some selling, and then that's where the rubber meets the road, right? Either we're going to get, a candle that looks something more on the order of this and we get a pullback, or we're going to zoom through it and make, a breakout basically above 460. But this is the area that I'm watching, 455 to 460, for maybe some sellers to step in. Right now, it's been really strong off the bottom. I mean, 10% off the bottom, right? Almost in a straight line. Crazy strong. Very hard if you want to get involved. It was very hard to pick a spot along the way, but you had to hold your nose and pick a spot, because if not, you'd been left out of a fantastic move in the market. And that's just the way it goes, right? On the week, let's see what it was on the week. On the week, 2.31, right? And you can see these just giant green bars every single week now, 3 in a row. Again, as we come into here, and it gives you a better feel of the structure. Volume the last 2 weeks, a little bit less than the prior. Okay, that's fine. Again, this is the area that I'm watching. All right, let's go to RSP. Here's RSP, and you see is up 3.32. So SPY was only up 2.31, but RSP up 3.32, which shows you that it is a very broad-based rally. And that's what I'm looking at right there. Broad-based rally, right to the 200-day, right above it, actually. And now we're getting some, decent consolidation right there. And nothing says that this can't continue higher. Again, everything looks good. And again, we are above the 200-day now. 50 days starting to flatten out, which is very nice. You have that inverse head and shoulders, which just broke out of. Again, everything looks perfect along there. Looking at the Qs, gapped up this week and just holding up there, letting moving averages catch up. That looks really, really good. Now, where can supply come in? I think this 400-ish level, right? About 5% or so above. Not even 3.8% above or so. That is about where I think that maybe some selling may come in. Not that it's going to end the run, right? I'm not bearish into the here. I just think that sellers may be showing up because they did here in the past, right? So that's, just real simple. But there is still some more move left in here, and I think that everything is looking really bullish, and there's no reason to be bearish. I'm using deep view, by the way. This is and one cool thing they just added here, just going to show this. See how this is H? So on the ETFs, you click on the H and boom, all the underlying stocks then get listed automatically, all the holdings of the ETF. Really cool feature. And they're going to be adding the weighting. So soon you'll be able to see the weightings of it and sort by the weightings. You see Apple will be the largest weight, and Microsoft and Amazon and everything else. So that's coming. So that's really, really cool. Anyway, I don't know anybody else that does that. It's something that I know I've asked for. And they really, outdid themselves with that. So very, very cool feature right there. Anyway, so Qs look good. On the week, they were up 2.03, a very nice week. Looking at the equal weights, though, up 2.96. Again, shows you that the rally is broadening out. There's nothing bearish about any of that, right? Going back to the daily, you see the equal weight, again, gapped up, holding up, letting moving averages catch up. Got above, I think, the really important 74-ish, 73, 74 area, and trying to make the right side of the base. I think, 81 could be a spot that could get interesting. 79, 80, somewhere around here. Where it topped out there. And I could just draw a little, maybe something like in this area, maybe a little higher, maybe like that. Right? About 80-ish or so. That's an area that that could get, find some sellers, possibly on the equal weighted. But again, nothing says be bearish right now. Looking at the mid caps, this was kind of, I was trying out what I was kind of looking for, some sort of consolidation or pullback. Down 1% on Friday. That's kind of interesting. I wasn't expecting that. But let's see, on the week, it was up 4% on the week. So you see how strong it was as well. Equal weighted mid cap index up 4% on the week. Doesn't get much better than that. And then let's look at the IWM. Sorry. Up 5.43. Again, really strong on the week. I'm looking at the day. Has this inverse head and shoulders that a lot of the indexes kind of have on them now. The equal weighted indexes have this on it. And looks really good. Again, it was down 1.5% on Friday. Again, didn't love this candle, and it did follow through back to the downside. This is where kind of the rubber meets the road. Here's your 50-day trying to flatten out. Bigger picture, this is a very bearish look to it. But if it holds 162, 163, somewhere around there, right? 161, if it holds it, then everything's fine, right? If it just kind of consolidates here, if we lose 161, 162, the bearish scenario turns right back around on us. Looking at financials, broke the long-term downtrend line from the January top, so that's definitely a positive. Again, it's just a downtrend line. Let's not put too much stock in it, but that's a positive. More importantly, we are back above all the moving averages. The 50-day starting to turn back up, and things are trying to align bullishly again. I don't need financials to lead the market, but they need to participate, and that's exactly what they're doing right now. So they're doing what they're supposed to. SMH breaking out to all-time highs, right? Hard to be bearish with SMH at all-time highs, and that's where we're at. Now, we're starting to see, as they're moving higher, a much decline in volume. It's something to take note of. I won't trade off of it, but I'll be like, okay, maybe it's, it spent so much energy to get here. 20% move in a very short period of time. Maybe it's starting to get a little tired. Maybe it just needs to recheck, come back down to 157-ish or so, maybe fill this gap. NVIDIA earnings is next week. That's going to have a major role in SMH, right? But overall, there is nothing bearish about all-time highs, no matter what anybody tells you. Just, maybe it needs a little rest. And we'll look at the XSD, which is the equal weighted semiconductors. So on the equal weighted basis, it's still trapped underneath a 200-day moving average. That is basically flat. And so, but it's above a flattening 50-day, right? So now we have this battle of which way is it going to break? And I think the direction that it breaks is going to be very important for the market, right? So if it breaks, below, we'll call it 188.50 or so, that's a problem. And if it gets above 200, 250, that is very bullish. So I think XSD is going to give us a lot of information for the direction. Again, NVIDIA being only a small percentage of XSD, but it's going to have a major, major impact on the entire semiconductor sector. And this is actually one of the most important charts out there, SMH and XSD. So next week, when we look at them after earnings, it's going to give us a lot of information, I think. Looking at home builders, I mean, looks very strong, like a lot of the other index charts, another 3% or so to the upside. I think that's very possible and likely. And then we may find some sellers, but for now, again, very, very strong charts, just stair stepping higher. Probably a function of rates as well. Looking at XHB, looks exactly the same, right? You can't even tell the difference between the two charts. And it makes sense because it's also home builders with the ancillary support people, right? Things like Home Depot and stuff like that. All right, and then let's look at transports. IYT, back above the 200-day, above this very important area, and you see this is now starting to consolidate. Has room to the upside if it wants to go. So again, participating, which is what we want to see. We don't want to see transports breaking down, right? That would be a very bad sign, but it's not. I'm looking at the equal weighted. So equal weighted don't look quite as good, right? So the cap weighted, right there, above the 200, equal weighted below by a lot the 200, and below the 50. So you see the divergence there, right? We want to see these equal weights start to really catch up. We'll be watching that as well. A breakdown of these, again, would be a sign of problems to come. Right now, it's not doing it, but it's really not moving that much higher like everything else we've watched. So far, things are looking good. So our indexes are looking like they have some upside remaining, at least some, maybe completing a base and a lot more, right? But at the very least, well, let's get off there. Some more upside to come. And, all the support ETFs that really talk about, the economy in general are all recovering very nicely. Some will be running into some resistance too, 3 to 5% above. And so watching to see how price reacts there. So definitely nothing bearish on these charts yet. Looking at the VIX, we're down below 14 on the VIX into this general area. So this is an area where we can see sometimes some snapback rallies, but it can stay down here for a period of time as well. So don't think just because it hits, 13 or 12, right? It's got to snap back. It does quite often, don't get me wrong. But as you see over here, it can stay down here for a bit before it does snap back. So just low VIX, the lower it goes, the further that rubber band is stretched, but doesn't mean it has to snap back immediately. Looking at the credit spreads, let's see what they did on Friday. Again, near the bottom of their range. Again, just a consolidation range that's been going on for a year and a half. No big deal, right? But hasn't really done anything yet. Every time it comes up to the top end of the range, it falls down. Every time it comes down to the bottom end, it tends to go back up. So we'll see what this does. So there's no real signal there at this point. Percent stocks above the 50-day moving average. We're at 61.4. Again, there's room to the upside. I think once we get to the 80-ish%, doesn't have to get all the way up there. 75 is fine too. 75 to 80%, we're starting to get a little overdone. We're not, we still have some room to the upside, right? But again, that's where I'm looking for extreme-ish readings. As you've seen in the past, we're not there yet. Maybe next week we'll be closer, very possible. And then we'll go from there, depending on what's going on there, right? So it's a percent of stocks above the 50-day. And then let's look at the put call ratio. You see that things are starting to get a little bit more on the bullish side of things. Not super bullish, that'd be done here, but on the bullish side of things, which is fine. That's what bull markets do, right? People should be leaning bullish in bull markets, and they are. So that's fine right there. The dollar continues to fall. Let's go back to a bar chart here. So we had the whoopsie breakdown, strong move higher. This was a very tough time in the market. Then we had this consolidation. It should have moved higher. It didn't, right? This was the sign of to get long right there, a signal, little snapback, and then boom again, boom again. Again, we have room to the downside. This keeps kind of, stair stepping down. I think it could get all the way down to this 100-ish, 101-ish area. That would be pretty significant and be a really good time for stocks. Period. End of story. And looking at the 10-year yield, it's I'll go back to easier to see on the line chart. This one, you see how it broke out of this general area and it's been falling. And I wouldn't be shocked if we get to 4.3-ish or so. That would be totally normal, 4.25 even, right? You can see if we go to the bar chart, 4.3-ish, maybe even 4.35. That would be totally normal. And again, be very good for stocks. What it does when it gets there, that's a different story. So I think we have some more wiggle room to be seen. And I think that there's, another potentially good week or two ahead for us. And then we'll see. A lot of people want to make predictions and prognostications about what the future is going to be. Someone will say, oh, what do you think is going to happen in January or February? And honestly, I have no idea what's going to happen in January or February. Don't know. There's no way. If I did know, right, I would be a billionaire, trillionaire, right, if we see the future. There's no way we can see what it's showing us, see where potential areas of support and resistance are. We can decide to participate aggressively in good markets and to raise cash or even potentially short in bad markets. That's it. And if we do that reasonably right, we're going to make money in the stock market and we're going to outperform. That's what I do with my subscribers on Twitter. And we've been, we got long at the beginning of November, right? I mean, when you go back and look, and my subscribers will attest to this, we got long at the end of May, beginning of June. We got neutral or even a little short at the end of July. We were short for 3 months, which is really hard to be short, not short, but neutral, I would say, and a little short for that 3 months after July until November. And it's hard to sit on your hands for 3 months and not do much. But that's what we did. And then beginning of November, we got long again. And then now we're making money in the market again. And we'll see how long it goes. Maybe it only goes for another week. Maybe it goes 2 weeks. Maybe it goes much longer. We'll see. The charts will give us the signs. And we just follow the signposts. And we'll probably be long at the top. And we'll probably be neutral at the bottom. And we catch the meat in between. That's what we're looking for, the meat in between. Anyway, hope you all are doing well. Thank you for watching. Good luck this week. Happy Thanksgiving. Markets obviously close on Thursday, and I'm not sure if they're open half a day on Friday or not. You have to check that. Anyway, hope you all are doing well. Take care, guys. Thanks. Bye.